Singapore's event scene is absolutely massive, and one of the biggest names in the game, Kin Global, is about to go public. So in this explainer, we're going to tear into their official IPO documents to uncover the potential rewards and, of course, the serious risks. Let's get right into it.
Okay, so take a look at this. This right here, this is the kind of massive, high-energy event that's become Kin Global's trademark. They are the engine behind some of the biggest spectacles in the region, and now they're opening up their books to the public. The big question is, for you as a potential investor, is this a golden opportunity or a seriously risky bet? Let's dig in and find out.
All right, first things first, let's really get to know the company at the heart of all this. Who exactly is Kin Global, and how on earth did they get to be such a powerhouse?
So, at its heart, Kin Global isn't just some contractor you hire. They call themselves a full-service delivery partner. What does that even mean? Well, it means they handle the whole shebang, from the very first idea scribbled on a napkin all the way to cleaning up after the party's over. And their sweet spot? These huge, complicated global sports tournaments.
And believe me, they've got the track record to back it up. I mean, since just 2017, they've pulled off over 500 successful projects. And we're talking about a huge range here, right? From the roar of the crowd at a major rugby championship to the dead silence and focus of a world-class swimming competition. That kind of diverse experience, that's a huge part of their pitch. Okay, now check this number out. 17.3%. That's a big deal. Why? Because that was their slice of Singapore's sports event industry pie back in 2024. And to really put that into perspective for you, that's nearly 5 times bigger than their nearest competitor. That doesn't just make them a leader, it makes them the undisputed champion in their own backyard.
Okay, so keeping that market dominance in mind, let's talk about the growth story. This is what you might call the bull case. Basically, the super optimistic argument for why Kin Global's future could be incredibly bright.
So this whole optimistic case really stands on 4 main pillars. First up, like we just said, they absolutely dominate their market. Second, the folks running the show, they've got over 75 years of collective experience. That's a ton of know-how. Third, they're in the perfect spot to catch this massive wave of Singapore's tourism industry, which, get this, is expected to hit almost $29 billion by 2029. And finally, they're not just staying home. They're already looking abroad with the whole team focused on the Middle East.
And if you want a perfect example of what these guys can do, look no further than this. So for the World Aquatics Championships, they literally took a public car park, and in less than 6 months, turned it into a jaw-dropping 4,800-seat arena. And not just an arena, but one with competition and practice pools. I mean, come on. This is the kind of crazy, high-stakes project that builds a global reputation.
So what's the game plan for the future? How are they going to keep growing? Well, their strategy is actually pretty clear and breaks down into 3 steps. 1, just scale up what they already do best, managing these huge sports events. 2, they want to move up the food chain, so to speak. Instead of just managing events for other people, they want to start creating and owning the intellectual property for their own sporting events. That's a potential game changer. And 3, pretty simple, keep expanding their services and their global footprint.
Okay, that all sounds great, right? Super promising. But as any smart investor knows, every single investment has a flip side. So what are the risks here? What could go wrong for Kin Global? Funny enough, their own documents lay it all out for us pretty clearly.
And that brings us to the other side of the coin, the bear case. What are the reasons you might want to pump the brakes and be a little more cautious? Let's break down the challenges and the weak spots.
So probably the biggest risk of all comes from the way their business is built. It's project-based. That means there's no steady, guaranteed long-term paycheck coming in. They have to constantly go out and win new contracts, and they're doing it in a super competitive, cutthroat industry. Plus, a lot of their success rides on their top executives sticking around. And of course, you've got the classic problems of projects going over budget or their suppliers letting them down.
And then there are the risks that are totally 100% out of their hands. This quote, which is straight from their own legal filing, is a pretty sobering reminder of just how vulnerable they can be. Think about it. Things like massive power outages, labor disputes, crazy weather, or, yeah, another global pandemic could just crush their bottom line overnight.
This next point is super important for any investor to understand. It's where they're listing their shares. It's on something called the Catalyst Board. Now, the Catalyst Board is designed for smaller, up-and-coming companies. The Singapore Exchange itself basically puts a warning label on it saying these stocks can be a lot riskier and might not have the long, stable history of the big companies you see on the main board. All right, we've heard the good story and we've heard the warnings. Now it's time to get real and look at the hard numbers. Let's follow the money and see what the financials are actually telling us.
Okay, so this table really tells a fascinating story. You can see their revenue more than doubled from 2022 to 2023, which is great, but then, whoa, something wild happened. In just the first 9 months of fiscal year 2025, their revenue just exploded to over 56 million Singapore dollars, and profits shot up to 4.3 million. I mean, that is a gigantic leap from the years before.
This bar chart really hammers that point home. I mean, look at it. The revenue they made in just 9 months in 2025 absolutely dwarfs the average of the previous 3 full years combined. So the million-dollar question for any investor has to be, what on earth caused that massive spike? And more importantly, can they do it again?
And, well, the document gives us the answer pretty directly. That incredible jump was almost entirely driven by a few massive one-off projects, the big one being that World Aquatics Championships we talked about. This just perfectly illustrates the risk we mentioned earlier, the project-based nature of their business. It's incredibly impressive, for sure, but it also shines a huge spotlight on the fact that their future success depends entirely on their ability to land the next gigantic contract.
Okay, so let's pull all these threads together. We've looked at the strengths, we've looked at the risks, we've dug into the numbers. What's the final takeaway on this whole investment proposition?
So here it is, the bottom line. The bull case, the argument for investing, is that you're betting on a dominant market leader with a clear plan for growth, and you're looking at that spectacular recent financial performance. On the other hand, the bear case, the reason to be cautious, is that their revenue is unpredictable because it's project-based, they're facing some really intense competition, and so much of their success is riding on just a few key people. Ultimately, if you're thinking about investing, you really have to weigh their proven track record of pulling off these amazing projects against the massive uncertainty that is just baked right into their business model.
This content is intended to serve strictly and only as an informational, independent, objective summary of recent events, and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.